Alright, YouTube, Stocks by the Numbers here. Welcome back. Wanted to take a look at a potential short-term trade here in SBUX Corporation, ticker symbol SBUX here on the NASDAQ. Stock right now, 98.57 a share, down about 4 cents here on the day, relatively flat. Market's climbing here, and basically what's going on here is we're having another backlash here on the Pride Month decorations or whatever the heck is going on. But let's look at the numbers real quick. $113 billion market cap, paying about a 2.15% dividend yield for you to own shares of the company. They're trading 32 times earnings, earning a little over $3 a share. Now, on the revenue side here, they're looking pretty good, I can't lie. They basically consistently increase quarter over quarter, year over year. Me personally, I am not a Starbucks drinker. However, I know people religiously line up and go to the drive-thrus every day of the week before they go to work or whatever, do whatever the heck they got to do, and they have no problem paying, $9 for a coffee. That is entirely your own prerogative. But the numbers cannot be denied. Again, if we switch over here annually, we can see we go from low, mid 20 billions coming out of the pandemic up to 29 billion, and then last year, as we see, 32.23 billion. So again, revenue cannot be denied. Look at this, quarter over quarter, just consistently increasing. A little bit of a plateau there at around 871, 872 billion, but overall, the company seems to be pretty financially stable. Now, you could say the PE is a little high again at 32, and it could sell off, but more importantly, what's going on is this company, again, recently had some workers just walk out, really, based on the Pride decor, as we see here. And we can see that the company said it closed 21 stores early since Friday because of staffing shortages, right? So you got 20 plus locations doing little to no business because there's not enough staff there. And as of Sunday, 104 U.S. locations had staff participating in the strikes, in most cases limiting service to customers, right? So now the business itself is suffering because obviously the workers are striking and they're not able to take care of the customers. And in my opinion right here, if we look just in the last couple of days, this is really when it was announced. As you see, stock was trading at about 100.5, maybe around the 101 level, and then immediately chunked down and sold down to about 97.5. And for the last 4 or 5 days has really kind of just been bouncing around here in this downward channel. Now, technically, I guess you can say we're now in a long-term descending wedge, and we could eventually pop out of it. However, in my opinion, we have these earnings coming up here. So that's why now with this news coming out, as you see, period ending June of 23, and that's just when all this stuff kind of just happened and just started, right? So the last couple of days of June, Starbucks may have lost a couple of dollars in potential business because of staff shortages. So right here on this earnings report, you may not immediately see the reaction based on what happened here just in the last week or so. So probably another 3 months out, which would be November 1st, then, in my opinion, on that earnings report, I would predict, in my opinion, that they're most likely going to miss those estimates, and then the stock is going to pull back. But even here in the short term, again, this is probably not a trade that's going to net you, 400 or 500% return, unless, of course, it starts trending on social media and everyone and their brother sells it all at the same time. But chances are, in my opinion, I think even a break here of this 1 year fib, 97.20, I think that's very doable. And then coming down and retesting this fib here of 95.28, of course, is very doable as well. The stock, again, has been in a downtrend for the last several months. And of course, we have our main level here at about 93.5. So again, even if it drops 5 points here, I'm sure any put options you have will probably move pretty nicely, and you can make yourself a nice quick profit here in the short term. But again, 400 or 500% return, probably not. However, in this market, as we're learning here, you cannot just buy and hold these options positions because this market is extremely unpredictable. And a lot of people are coming out saying that the SPY, the Dow, all of these indexes should start to pull back, and they are kind of approaching these overweighted levels. So if everything does begin to chunk down and pull back, that's why a 5-point drop here is very doable. But more importantly, again, going back to the options, this is a trader's market. It's with the options, you can't just buy and hold. You have to be in and out. So a situation like this, if you step in on puts here at 98.5 and then let's say just the stock pulls back to like 96.5 and you know, starts approaching like the 95s, like you're probably better off taking the money and running, right? Because again, there is no guarantee that it pulls back to 93.5. This is just my prediction. But to step in on puts and just continuously hold throughout any profits that you would have potentially seen, to then just like give them back as the stock rebounds just because you held on and you were looking for the highest possible return and the most possible profit. It's like we always say, bulls make money, bears make money, pigs, they get slaughtered. So if you happen to step in on some puts here at roughly 98.5, this starts pulling back 2-3 points, you're better off being in and out. But in my opinion, I do think it's going to start pulling back. And even here, just looking back at the last couple of days, again, we have been in this downward channel, and now the stock has risen up to the top of the channel. So to buy puts here and to ride it back down to 97.25 and have it retest that 1 year 97.20 fib level, you know, not too crazy. And again, probably a decent time, in my opinion, to step in and buy puts. And of course, if it does pull back, you will immediately be up in profits. But switching over here to stock charts here, let's look at the daily first. And we can see that even though the stock, again, has chunked down and kind of dropped down below this 200-day moving average sitting here at 99.07, looks like the MACD has flattened out. And if we continue, we're about to potentially cross to the downside. So if this crosses here, again, slight red day right now, but if this crosses here, then again, you can see the chunk down inside of the next day or two potentially, and you could immediately make those short-term profits. The RSI sitting here at 41.4, so haven't approached that 30 benchmark oversold level yet. So again, we could continue to slide lower. And that was the daily or the weekly? That was the daily. Switching over here to the weekly. My apologies. Switching over here to the weekly, you can see the RSI was up at 70. The stock, you know, everything was fine. Stock was 100 plus. And now since then has basically been actually slowly selling off here really since 2023. And you can see the MACD also slightly pulling back as well. Still in a downtrend. And that's why I'm saying I do think that it will most likely go down before it goes up. And here we have our 50-day moving average at 96.84, and you can see the low here of 97.30. So that's why I'm saying it's going to potentially, in my opinion, begin to test all of these support and fib and moving averages slightly below where it is now, and chances are it should technically slowly break through all of these levels. So again, I marked, I believe it was what, like 93.5? So here at this 200-day moving average, 91.33, of course, definitely doable. But again, more importantly, you can see that it pulled back to 97.30, 50-day moving average 96.84, bottom, 1 year fib level was 97.20, right? So here we're sitting at 98.5. We could pull back to the bottom of this range again, which as we see here is about 97.20. Pull back on the 1 year, there's our fib, 97.20, and then once it breaks there, it will probably retest the 50-day moving average of 96.84 and just continuously pull back. Even if we drop here about 4 points to the bottom Bollinger Band of 94.22, I mean, that'll be beautiful for all of my short-term put holders. But again, another situation where they're basically just screwing with people. We have another corporation who is apparently just pushing the envelope too far, and I'm very proud to say that we did have a large group of Americans here domestically, and again, most of them were in big cities. Most of them were in big cities, which, believe it or not, you would think wouldn't be where it happened, but as we see here, a dozen workers picketed outside New York's Astor Place, location. No, Pride marches. Where was the other one? Oh, no, wait. That was the same article we looked at before. Yeah, so here, baristas at Chicago, Baltimore, Seattle, Philly, and Pittsburgh stores were among those on strike, right? So you have people in the big cities. We're not talking about, like, people read a headline like that, and they're like, oh, yeah, it's probably like some small hick town out there in Kansas or something. No, we're talking Chicago, New York, Philly, right? These are the main hubs where the most revenue is generated for this company, StarBucks. And you got workers just saying, hey, you know what, F you, I'm walking out, I ain't dealing with this crap anymore. So, again, every time we're seeing, as of late, with companies like Target, Anheuser-Busch, anytime these corporations really push this envelope too far, the workers, the customers, they just begin to percolate, and then before you know it, the stock begins to crater, and everyone and their brother boycotts the company, the service, the product, and of course sells the stock and shorts the stock. So again, are you going to see potential 500% return? Probably not. If you step in here at 98.5 on some puts, and of course buy yourself some time is key. If you buy yourself some time, in my opinion, I think it's going to be a slam dunk. But that's just me. A little short-term trade idea, and honestly, real quick video, and I'm going to end it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually very quick to reply. Thumbs up. Helps out the algorithm. Like the video, share the video. Gets more eyes on the channel. More importantly, handshake agreement. I will give you guys short-term trade ideas, long-term investment ideas, potential projections on the NASDAQ and the Dow as I've laid out here in the Discord channel as well. Another reminder, join the Discord if you have not already. If you are interested in joining a little community, having a little back and forth, and of course, more importantly, immediately being able to hear about any short-term trade ideas that any of us may have, whether it's me or it's someone else in the Discord. Because again, much easier and quicker for us to just communicate via Discord instantaneously so that we can all look at the position and decide whether we want to get involved or not, as opposed to, again, making a 5-10 minute video, waiting 30-40 minutes for YouTube to let it upload, and then again, potentially by the time you may see it, it may be too late, because we know how quickly these markets move. So if you can join the Discord, if you don't want to or you don't care, that's fine. That's fine. But again, handshake agreement. I have no problem making these videos on any stock recommendations you want, on the market overall, any ideas that I might have. All I ask, push the subscribe button. That is how you help me help you. That's all I ask. But more importantly, like I always say moving forward, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Let's stay sharp. Let's stay focused. Stay positive. Have a good day.